Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I've been a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to Tuesday's edition of Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, flying solo here with the controls. Triple D working hard there over at his workstation. He'll be joining us here in just a few minutes. Got a lot to cover on today's show. The rally, renewed trade talks with U.S. and China. Oil down for the 12th day in a row. Little less news. Deadline for Italian government to submit an amended budget. Turnaround Tuesday after that perfect storm we had on Monday with the LITE news and Apple and the other suppliers getting hit. PCG taking a hit because of the fires in California. Goldman Sachs also has its biggest drop in 7 years after Malaysia seeks refund of a doomed deal. Minor news, Kellogg exploring sale of Keebler, Famous Amos, and its fruit snack business. Triple D, how am I doing so far?
Doing pretty good. Look, no hiccups. Can everybody hear me okay, too? We'll just check it one time here.
Check,
but Joel, look
check.
at this. He's going to get there. He's going to get through the whole show. No gremlins. No technical hiccups. Just 100% on the ball.
But you know what?
Uh-oh, but Stock Hunter says there's an echo.
An echo.
I don't know. Let's check. Here, I'll check and see. I think he's okay.
Yeah.
I don't hear an echo. I think you're good. I think Stock Hunter's just pulling your leg. I think you're good.
And
I don't hear any echoes. Joel's in control, Matt. So you're good to go.
I'm gonna have to. Well, the big thing will be at 8:35.
Stock Hunter says a good echo. Check to make sure you don't have two of them going, because I've done that before, where you have two pre-market prep windows open and then they'll echo back and forth. But I don't hear the echo. RCA says no echo. Spinner says little echo, but it's okay. So we're gonna give you a pass so far here, Joe.
Oh, but little. I don't know. I mean, I'm trying to think of what else I have open here, but
I don't hear an echo.
Okay, no
Matt
echo.
says he hears three
George
of me,
says no echo. Alex Delano says no echo. The show must go on, Dennis.
The show must go on. Some people got echoes, some people don't. I don't have an echo, so I'm giving you a pass here, Joel. Good job getting us set up here. Look at Spencer if you're listening out there. Look, Spencer's sleeping, isn't he?
No,
5 o'clock in the morning, West Coast. Is he sleeping in?
No, they actually, I did see Spencer this morning. They're flying out to San Francisco this morning.
Oh, it's just flying out this morning.
Yeah,
okay.
but he forgot his business cards. So he had to
get him back and get him off the plane and get those business cards. We need those pre-market prep cards out there. We're trying to promote this show.
Okay, and let's see here. Let's just do a quick rundown of the S&Ps here.
Do it.
We made a pre-market low at 27.19, and then we turned around. Pre-market high 27.50 and a quarter. Don't have much there. One number I'll be looking at on the upside here. I call it the PEC, and that was the pre-election close. That was at 27.59. Then we had the ridiculous rally after that, and then we settled back down. So 27.59, that's another target on the upside. If we do go into reverse here, mid-range on the session, that comes way down at 27.35. So we'll keep an eye on that if we happen to peel back. But let's start here. Let's start out with some earnings here. Dennis, do you want to read the reports? You want me to read the reports? How do you want to do it?
You read the reports. We're going to the couple from last night, couple Chinese stocks reporting there. We had YY and we had HUYA. And I believe Spinner letting us know that YY owns a big chunk of HUYA as well. So let's just go to HUYA first. This is a stock that a lot of people trade. I do have a trading position on in this one right now. Just initiated it, but give us the numbers.
Okay, HUYA. I'll bring up my, let's see. EPS, 4 cents, in line, sales, 177.12 million. That beat estimate of 176.68 million. And the Q4 sales here, I can't really looks like Q4 sales might be in range here. RMB, what's that? The Rumba, 140 to 144. I don't know how that matches up with analyst estimates, but let's break down the pre-market action.
That's your job.
I got
to we'll leave it with you on that one because you got all the pre-market charts you're showing us. So break down the pre-market action and after hours last night, Joel.
Okay. All right. I got to read the reports and I have to do.
Yeah, you do. You got Spencer's job and your job. My job is just my job and trading.
All right. It's traded up $1.
So you have 2 jobs this morning. Get with the ball.
I'm gonna need a little. I'm gonna take a little break halfway through the show and take a little nap. Pre-market high is 20.52. You can see that spike that you had up to 2052 recently. Going to the daily charts here, we have not been up in this area. I see 2020 was a high. After that, I see resistance here. Your November 2nd high was 21.45 if you're looking for another target on the upside.
I'm going to limit my comments because I do have a trading position on it. I will say also you're seeing some sympathy in some of the other Chinese names, BILI trading up, IQ trading up. I have a position in IQ as well, so I'll limit my comments there. All China getting a nice pop there last night. The catalyst. Trade talks renewed here, Joel. What's this headline? Trade talks renewed.
Yeah, that happened. That happened late this morning because you had mentioned that upon your 8 o'clock close, things were red and things were red. And then what do you know? Mnuchin and one of the Chinese leaders. I mean, that's one thing that makes you so hard to stay perpetually short this market is when a deal
headline risk for the shorts.
Yeah, we were talking about that. And good timing on it. They leak it out, it comes back in. So we'll just have to see. I think another thing giving a little boost to HUYA is the Credit Suisse upgrade. They announced a 2580 price target, but I got the daily chart for here, folks. Just doesn't look pretty. I mean, you got a lot of overhead supply here. This thing was up over $50. So if you happen to pick it up on the cheap there near 1850, you're going to have company from all the people that got caught in June, July, August, September, and October.
And fading pops has been rewarded still as of late. I mean, look at Twilio. And it's amazing how this market, if you've got a great report and it pops 15, 20, 30%, and then you look at the stock a week later, how often does it give it back? A lot of times. So you had Twilio, great report, the big pop, and you know what? Here it is 4 days later, it's given back almost 2/3 of the gain from the highs anyway. It's got up to $98.89. I thought it was going to get to 100. It did not before reversing course. Now it's way back down the 84 handle here this morning. It's tough. I mean, and I've been using that opportunity too. I had that Harris, HRS, when I had the big pop after it announced that merger. I took some off the table there, and that wasn't an earnings pop, but it just seems like in this market, when stuff gets, a 10, 15% pop, it's a good time to ring the register because there is not the follow through that there was before. There was always a lot of follow through for the last couple of years. You saw some earnings gap and goes. You're not seeing that here now. It's a change of mindset, and institutional money managers are using the pops to lighten up their positions, and that's exactly what they did in Twilio recently here. Couldn't hold the gains for even 3 days.
You know what? I got a little egg on my face on this one because I was talking about shorting it before the report, and I didn't. And then I was talking about shorting it after the report, and then I didn't. And and then I just took it off my screen. But had I been looking at the chart at this one over the weekend, I think I would have had some confidence when it went through that 89. 90? Yeah, 90. Yep, because that was the low. 89.87 was your low on Friday. And, it did not make a new high after the earnings day bump. It came up short, but that would have been a good call. And now you got a gap to fill down to 74.32. So next report here, let me
just before we go to the next report, we just want to say the market is leaking here and leaking big time. We were up, and when I came in, we were up another handle. We were trading the 168, 25 area on the Qs. SPYs were up another handle as well. And now you look here and we are just slowly leaking. And this gains, like the market just seems to not be able to hold the gains. Ugly, ugly day for the market yesterday. It's not surprising. I've actually been trying to short into this rally here this morning, trying to position myself because I look at Apple down $1.50 again here, your market leader, the stock that brought us down yesterday. And you could say that was the whole catalyst yesterday. It was LITE was the real, but then Apple rolling over $11 brought the entire market down with it. Apple's down another $1.50, guys. So you look in full disclosure, I still have Apple, obviously my long-term portfolio, and I don't have a trade on it too. But I mean, you look at this and the relative strength here is not good. If you think this market is getting driven by the leaders, and Apple was a leader yesterday, well, it trading down $1.50 is not helping the market here this morning.
And how long have we been talking? Have I been talking about that gap fill from the last earnings report? That would be at 192.20, and that will be filled today. It's not a automatic rebound from there. I was hoping to get a little bit more pop up to 215, 220, fill the gap on the upside. Instead, we are filling the gap on the downside. That will be fulfilled at 192.20. You had a couple lows. If you're looking for some more downside, you got a double bottom in Apple from July 30th and July 31st. And let's call it the lower 189 handle. That's your next support here in Apple, trading down $1.58 and 192.59. And let's see if I can go to the 15-minute chart here and just give you a look at the pre-market action. There you go, trading at the lows of the pre-market session. You know what else is leaking here, Dennis? Home Depot. Home Depot is so
Pops to fade. How high did it get? Before we go to the report,
look at that.
How high did we get?
Look at that. I'm actually prepared on this one. You got to a nice round number, 186 even, Triple D.
They up $7, man. Guys, you're at a bear market here. It's a completely different market. Don't chase stocks up this much when you're in this type of environment here, especially when they get back all of its losses from yesterday. People just look and ring the register. I wouldn't be surprised if it goes red.
And
I haven't even heard the numbers yet. Just, and it just shows you how the sentiment is, and sentiment matters more than numbers sometimes. Assuming the numbers were good, but you know what? They don't even matter because there's people who just want to sell pops, and you get it. They're like, thank you very much. I have all my losses back from yesterday. I will ring the register, or I will, at least get out of my position and scratch my trade, or try to scratch my trade.
They beat on the EPS for the 10th quarter in a row. Also for the 13th time in the last 15 sessions. And then boom, boom, like for the 15th time in the last 20. So you got an EPS beat here. Street estimates were at 227. You came in at 251. Beat on revenues as well. Street was looking for an estimate of 26.25 billion. They came in at 26.30 billion. So you got the pop, and now you got the drop here. Now that we are, now that 186 level looks to be out of the question here, I will go to my daily chart and see what we can glean from the dailies here. Boom. What did you have on the dailies? You had nothing at 186. You had a high. What was your high from yesterday?
I'm just going to say yesterday's low, Joel. 179.02. You got to hold yesterday's low.
Really?
If you do not hold yesterday's low, there's some other little areas there here, but I think it's going to get ugly because you're going to have everybody thinking, man, this is down on a good report. I don't want to own this. So if this does not hold yesterday's low, this thing could be down $5 today. It's got to hold. It's got to hold. That's the key for the bulls.
179.
It's got to hold yesterday's low. I don't think it can get that low, but I think it could lose. To get down to the 175 area. If it loses 179, what's the low yesterday? 179.02.
Yeah.
Call it $179. Maybe it bounces there. Maybe that's where they defend it. I'd probably be more inclined to bring in a short there than to put on a long, though. I'll just tell you that much. That's how I'm scared on this market here this morning.
Okay. And you also had a low in the lower 179 handle back on November 5th. And then if Dennis' scenario comes to fruition here, you had a November 2nd low, 177.39. And then a pair of lows in the 175 handle. You want to check its brethren here. Lows here. Getting a little bit of a sympathy pop. Not much. Up only 35 cents here.
Yeah, the sympathy pop is gone. A trade up to 97.5 this morning. Again, same story. Well, obviously watch your leader. Your leader gives it back. Your sympathy play is going to work out very well. So anyways, lows, it's got a bid. It's 50 cents wide, but watch your leader. Watch Home Depot.
Okay. And we did HUYA. We didn't do YY earnings, though, did we?
Yeah, give us the YY ones. It owns a huge chunk of HUYA too, at least according to Spinner there. So, that could be obviously a catalyst for it to go higher. HUY is having a really good morning, but YY is leaking here as well.
You had an EPS beat, estimates at $1.67. You came in at $1.76. Beat on the revenue by a little bit here. Estimate revenue $576.86 million, and they came in at $597 million. Looking at YY here, you got a pop on the pre-market trading, just over $65 now, starting to leak as well.
Yeah, it's ugly. Let's go to one stock that is not leaking and is looking very strong this morning, and that is because of low expectations. Beazer Homes, we know the home builders have been annihilated, and when the expectations are this low, if they say anything remotely okay, probably going higher. What did they do on the report? Beazer Homes.
BZH. First, let me get the chart in here. Home builders notorious here for having pops and drops here. Let me get the BZH up here for you folks at home. Oh, a little bit of a fast market here. BZH is trading up $1.30.
What's the report?
I'm getting the report. I wanted to get the chart up here first. Let's see here. For the quarter, they had a beat. The street estimate's $1.01. They came in at $1.15. Beat on revenues, estimate $747, and they came in at $768. That's the report for Beazer Homes, trading up $1.30.
Good pop here. $10, I'll just say. I think you get anywhere near the big psychological level of $10. I think you probably run into resistance, but we could squeeze them a bit. I mean, this stock has been in a complete, and just been getting murdered here for a long time. So you could squeeze them a bit.
Yeah, look at that. Triple bottom, quad bottom at the lows of the move. If you do go into reverse in Beazer Homes, you put in a institutional bottom there in the lower $8 handle. Doesn't look like we're going to be revisiting it. We haven't been over $10 here since October 11th, when you had a 10.07 high. And just be aware that on October 16th and 17th, you had a couple highs at 993 and 994. So big level at $10 for Beazer Homes. Is there a dividend on that? Any kind of yield on that stock, Dennis?
I don't think so. No dividend.
Did you see what stock held up yesterday? Okay. And I'm not sure. Fords, look at this, just hanging out here.
It's been hanging out for too long, though, hasn't it? I get worried they hang out there too long.
Look at that.
This got used 2 days ago. Use that candle from 2 days ago if you trade. I'd say below 9.25. We're going back down under 9. If we could ever get up above 980, though, then it could start to move and think about 10 again. So I think you're range bound until you can break outside that range. But massive support down the 925 area. That's the level. If you're long this thing, that would be my stop out below 925. I think if it breaches 925, you could go right back down to the lows in the 8 handle. So that's the key for Ford. But value, it's a little bit more in favor here right now. So maybe there's an argument that it's holding up. I mean, it's held up yesterday well.
Dennis, 7%. Where are you going to get 7% on your money?
6.29. You think it's safe?
Yeah.
I don't know if it's safe. That's why I'm not. I sold my Ford. I don't even have any Ford anymore. I sold it all.
You sold.
So that's how much I love Ford. I'm gone. I've had Ford for a decade. Gone.
And what truck?
Sold it. Took the loss. Ate the loss. That's how confident I was in the dividend. I sold my long-term investment. I bought the Ford truck, and I love the Ford truck.
You're conflicted.
Still sold the stock.
You're conflicted. You sold the stock, but you bought the truck.
I hedged myself with the truck buy.
Okay. All right. Let's do. We got some other reports here. Eat more. AAP. All right.
Auto Parts. Another stock that actually this stock's performed pretty well. Some of the retailers have held up well. Stock's going higher here on the report there too. So look at that. This was $80 a year ago. So it just quietly doubled here, more than doubled here in the last year. It's been a pretty good year for Advanced Auto Parts. I mean, you're still ways off those all-time highs, but not that far off anymore. 201. You're not within striking distance yet, but you're getting up there. That being said, stock up $8, terrible tape. No, not chasing it.
Street estimates were at $1.75. They came in at $1.89. Revenue is beat as well. 2.23 billion. Oh no. Yep, a little revenue beat. 2.23 billion. That was the estimates. They came in at 2.275 billion. I guess they just didn't totally get Amazon, right? That was the Amazon was going to start selling auto parts.
That's probably the bottom when we get those. It typically is the bottom when these sell off. How often is it the bottom? When these things get the Amazon, they're coming into space. Amazon's coming for them. I mean, Walgreens. Remember, I think Walgreens got down like $64 or something the day they were going to get Amazon. You obviously saw Costco and Walmart. Costco down to about $160 the day that Amazon bought Whole Foods. It seems like that's at the bottom when they come in here and Amazon's going to come eat your lunch. It seems like that's the bottom for those stocks. So that's a good contrarian signal. When Amazon's coming for you, sometimes a good idea to actually buy the stock.
Wow, this thing bottomed a year ago in November. It's 78.81. Ended the year at 99.69, and now you're knocking on the door of $200. Going to the daily charts. Let's see here. You were above the high from Friday. That Friday's high was 174.71. So you like to see it stay above that, and then you just got to go to your monthlies here. Man, there was a lot of monthly resistance at 171.50. We've taken that out here, but we'll see if people want to ring their register here in Advance Auto Parts. O'Reilly Auto Parts.
O'Reilly.
Is that moving off this?
I was doing that for the Brentster. I don't know if he's there. Brentster's, I guess.
You know what? We are such a skeleton.
Who's left? Who's left in there?
You know what? Brent,
you should pan the camera around and see who's left in the office.
Do you want me to start messing with
no,
the
maybe
screens?
not. Don't play with the camera.
Let's not.
Because he'll never get it back on himself.
Brent is sick. Okay. And then Jason, Spencer 1, Spencer 2, the events team, they're all out in California here. We got Bill. I wish I could show you. Bill has been, I got in at 6:30 this morning, and Bill was already in a fast market. Like I was asking him questions, he wasn't even answering. So got Bill working hard. We got Chubbs back working the editorial desk. We got a few marketing people in here, but definitely a ghost town.
Skeleton crew there at Benzinga.
Yeah, for the world headquarters here.
What about Tyson Foods? We do the chicken stock?
We did not do chicken here.
Don't call me chicken.
Remember when I had a tussle with that stock last year trying to short it and to no avail here? I think
I did too. I think Tyson Chicken's got my number too. Sometimes stocks just have your number. And you know what I've learned on my 20-year career is that when a stock's got your number, you take your piece of paper, you write the ticker symbol down there, and you put it on your do not trade list. Because everybody else, like I used to, you and me both, we used to like try to take revenge. We're like, I'm going to beat that stock. And you know what? It just beats you more. Best thing you can do when a stock's got your number, for whatever reason you trade a stock, you don't make money with it or you consistently lose with it, stop trading that stock.
Or you know what's the absolute worst? Like if you're shorting a stock, and then you try a revenge trade on the long side.
And then
you're
yeah, and then it just tanks. And then you're double mad because you're like, I was right the first time and I'm losing money because I'm wrong the second time. Yeah, revenge trading, bottom line, just doesn't work.
Okay, what they don't like about this report here is the revenue miss. They did okay on the EPS. Street estimates at $1.34. They came in at $1.58, but they were looking for $10.7 billion in revenues, and they came in at $9.9 billion. Actually, 9.999, a high frequency trader revenue number there. Nice. And we got it on the skids here. Tyson Chicken is under pressure here. Your pre-market low comes in at 58.15, trying to get a bounce here. Dennis, any technical thoughts here on this food stock?
One thing is it's a food stock. It is playing a little defense. If the market actually starts to roll over, this one could actually catch a bid, but it's not. I don't know. I own, here's how much I love all the food stocks. I don't even think I have one in my investment portfolio. Why is that? I had Kraft Heinz in there for a little bit and it obviously wasn't working. And really, we talked about this already. Yeah, these stocks have held up okay, but really when you put it in perspective, they've been dogs. I mean, if you go back and look at the monthlies on any of these food stocks, GIS was $70 back in 2016. It's 45 now. Kraft Heinz was $95 back in 2017, 97. It's 53 now. Conagra Foods, CAG was 46. Now it's 34. Mondelez, MDL Zebra, well, that's held up better. It actually only was up in the 48 area. It's 44. But I mean, these are getting life a little bit because they play defense, but whenever the market starts to turn, these things just go right back to the getter, it seems. So I don't know. There's a lot better places for my money. And the other thing is you got to consider too, as interest rates continue to climb, that becomes more attractive. I'd rather, throw my money if I can get 2-3%, in a guaranteed, investment like our bond or something like that, government bond. Well, that's way better than, taking risk for a 4% dividend. When there's no yield out there, these food stocks are more attractive. But now that there's competition for that, I'd rather just own some bonds, some government bonds, safer.
What about a Ford bond at 6.3?
No, I would not give Ford money at 6%. I hope they're going to give me a heck of a lot more than that, and they probably not.
All right, so I showed you the pre-market chart and I showed you the pre-market low. I just want to give you a level of interest here. If you're looking to bring in a short here in this stock, you made some lows. Where was it? I saw pair of lows, $57 area. We saw 57.20, 57 and a quarter low here. This was back in, those are monthly lows in May and June. I also saw some daily lows. So if in fact you take out the low on the pre-market low, take a look, $57 area. We also touched that in July. So there's your potential support here in Tyson Foods. So how are we doing?
We're doing good for time. Let's get to the imbalances in 3 minutes. So just before that, let's go to quick ratings. There's a couple interesting ones here this morning. You were telling me Best Buy. We got Best Buy in the ratings.
All right. We got Best Buy here. Now I got to switch my calendar here. I need a couple more arms here. And for Best Buy
Spencer's got a tough job.
Yeah. Best Buy caught a downgrade here from Curtis Nagel at Bank of America. He lowered his rating from buy, prior rating buy, to neutral. He lowered his price target from $92 down to $70. Now, the perpetual question that I have, it already traded $70. So do I wait for it to go back up to 70 or do I sell it in the hole? We have Best Buy traded down $1.58 at 65.57. Dennis, give us your technical thoughts while I pull up the pre.
Stock is out of favor. We will get earnings. I'm not sure when they line up, but we're coming into retail earnings season, so that can be a catalyst going forward. But I'd just say on this downgrade, and the stock is trading down here $1.50 on it. Got to look to the low from just the October low, which is 66.08. We are below that right now. I always say when stocks are making new low, you got to go. So I don't want any part of this if it's making new lows on the move.
Yeah, 65.05. That was your February and your yearly low for the issue. So we'll keep on that. That's only 65 cents away. And then if that happens to go by the wayside, folks, look out, Loretta. There's nothing until 58.82. That was your December low. End of the year at 68.47. So you are now in the red for the year on Best Buy after trading up to 84.37. Let me go to get the daily chart up here for you folks to take a look at the dailies for BBY.
What other ratings you got there? Quickly, Joel, just go fly through them on the pro.
Fly through them on the pro. I had Parago down at Berenberg. Did you
continue?
I have, we mentioned the Huya up at Credit Suisse. I have, what else do I have here for ratings?
I got NVIDIA. Is that right? NVIDIA upgrade Susquehanna?
Yeah, from neutral.
That's a big one.
Yeah.
Let's go talk NVIDIA. It's up $3 here this morning. Stock has been in the gutter. And I mean, big time yesterday, losing $12. Little bounce back here. sorry, Susquehanna, probably fading this. A trend is not your friend. Get anywhere near $200. I think you got sellers. I think you got people willing to lighten up. It is off significantly from the highs. It is, what Kramer was calling it best in breed in the semis. He's probably right, but I think this market's just too heavy for it.
You need to get up. Your pre-market high is 194.56, and the sad thing is that's nowhere near your high from yesterday. Your high from yesterday was 202.87. So not getting a lot back on this. If you happen to turn around and go in reverse and give this back, yesterday's low was 188.66. And the low of the move, if we really get negative here, 176.01 on October 29th. That looks like it's could be safe today with the upgrade. What else do we have? We have Xilinx upgraded at Susquehanna 2. And that's about Coal America downgraded at Nomera. Let's just before you do the imbalances, let's look at Goldman Sachs here, Dennis. Holy mackerel. First of all, did you get the memo on Friday about this? Because did you see the price action on Friday in Goldman Sachs? I mean, I know the market was weak, but this stock ticked up to 231.69 on Friday, ended the session at 222.65. You got just a chance, almost a chance, a gap fill. It did 222.31. We are now trading below the low from yesterday. Yesterday's low was 205.13. So I would say this needs to hold 205 here and get off the mat. I mean, Dennis, what's $600 million? If this fine goes through, I mean, is that a significant amount of money to a firm like Goldman Sachs?
No, the fine isn't significant. It's just the sentiment towards a stock. So, and you get a trust issue here going again. So, and obviously some negative press, but, the way market weighed on it too, but it's ugly. I mean, and we're down here again this morning. We are not bouncing. The weak get weaker. So, and see the S&P is trading up, Q's trading up, other banks all trading up. Goldman Sachs is down another $1. So that's, not a good sign here. I think you're going to see this maybe go under $200 here eventually, if not today, depending on how weak the market gets. But it's just and all the financials, not just picking on Goldman. I mean, they all had a pretty bad day yesterday, led by Goldman Sachs, though. So you look here and you think, man, this has just been such a good environment for banks. Really, it should have been anyways with interest rates starting to come higher. They haven't responded. This is, again, why I don't own any banks. Main reason I don't own any banks in my long-term investment portfolio because I got burned in the financial crisis. So I've got a couple ETFs that have some bank exposure, but I've been very underweight banks and financials for a long time. Obviously, I've talked a long time on this show about even, the financial situation over in Europe with Deutsche Bank trading under $10 now. A lot of your other European banks are very weak. I've, been saying we could have a little European financial crisis over there coming yet. That would not be good for the overall market. That would not be good for U.S. banks either. I stay very underweight banks.
All right. Dennis, give me your take here on this monthly chart here, because post-election, right, the big turnaround in the market that day, Goldman just exploded in the month of November, continued that rally here. But what concerns me here is if Goldman Sachs takes out $200, now I know we can find some daily levels, in between there, but you had this big candle, and in that month where it went it basically ended November at 161.27, ended October at 178.24 and ended up the next month at 219.29, and it just kept on going. So, I mean, I don't want to say there's no support until 175 here, but man, you just don't like to see, big candles on the upside.
Yeah, because we always say what goes up through an area quickly, when it's coming back down, goes down through that area very quickly as well. So that is concerning. Great point, Joel.
Okay. And the spoos here are leaking, as we mentioned here. Not good. Why can't they keep it up there near for the open to get a nice little
I'm not loving this tape at all. And like I said, I've been lightening up into it. I continue to lighten up into it as we go the show. Every time we pop up in something, I'm lightening up into that, trying to anyways. So I think we're going red here eventually.
Sorry, I've kind of been ignoring the chats here because of doing all this extra work here. But Jar Jar has a question. Does Dennis watch the tick chart while he's day trading? And
No, zero. I don't look at tick charts. There's too much noise on it.
Yeah.
I'm not interested in noise. I'm interested in more moves. So when you're looking at the ticks, I believe you're just gonna just be.
He might be talking about the actual tick chart where they isn't that like stocks trading on an uptick versus stocks trading on a downtick? You know, the tick and the TR.
Either way, the only either way, and obviously we talk technicals on the show, but the chart I look at the most is like the 3-month chart. I want to know if the stock's in an uptrend, downtrend, or no trend. That's what I want to know first of all. And when I trade the same stocks all the time, I don't even need to look at a chart because I know what it looks like. I see them, they're in my head. But I mean, when I'm trading something I haven't traded before, I haven't looked at a chart for a while, I want to know if the stock is uptrending, downtrending, or no trend. How do I find that out? By looking at the 3-month chart and seeing, what's happened in the last 3 months. So, Nick's actually good bring Nick in here too. Nick, we're just doing a little bit, we're talking technicals here, and I'm just we just got the wrong guy. Somebody was asking about tick charts. I was saying I don't use tick charts at all because I think there's too much noise in it. Do you use tick charts?
I don't.
You don't either?
It's simple. I'm literally a Main Street guy, so I just look at the charts and I'm consistent. Whatever I use, I'm consistent with it. So if you use the same measuring tool, even if it's broken, you're going to make the right decisions. If you stay consistent to the tool you're using to measure whatever you're measuring. That's my opinion.
The first chart I look at, and I was just saying, when I bring up a stock for the first time, I'm curious your methods too. I was just saying, when I bring up a stock and maybe I haven't traded before, I haven't looked at a chart for a long time. The first chart I look at is usually the 90-day. I want to see like whether the stock is in an uptrend, a downtrend, or no trend. So when I come in and the first thing, and people think day trade, I think I got tick charts and it's really short-term charts, and I don't. The first one I actually look at is the 90-day. What's the chart that you like the best?
It depends. Usually, if it's for a trade, I tend to go to a shorter time frame, but most times I think I start with a daily.
Yeah, the daily, which is 90-day. Like that's what I was saying.
Yeah, so I want to get a big picture.
Yeah.
And then most times, if I'm trying to identify a breakout of sorts, I have to go smaller time frames, and several ones. So I even have a few setups where, I'm sure you do too, where it's several time frames on one page, because then things become clear. Like what levels are important, where do I get in, where do I get out, where do I not get in, and things like that.
We're on the line with Nick Chahine. He's the author of Create Income with Option Spreads. He joins the show every Tuesday, sometimes on Wednesday at 8:35. And I just want a little round of applause there for bringing in Mr. Chahine on the fly here with no Spencer. I think last time that I was running the controls, I ended up booting myself off the call here. But Nick, we're hearing you loud and clear. Let's just do a little talk on the market here. We had you rally up off the lows here, starting to peel back. Bad day yesterday. I think it was a confluence of several different events here. I mean, it's just confirming a trading range here, or what are you looking here in the short term and the long term?
Well, last week was kind of a good week that ended on a sour note. Fundamentally, we still have the same problems. We still have the same three egos threatening our future here. And so I try to just identify actual momentum trades. And I had two scenarios from last week. One was upside. It was met and exceeded a little bit. And one was downside. And this one remains to be seen if it's going to come to fruition. So just to talk levels, last week's high, which was around 28.20, was a clear resistance line. I wrote up the fact that even though I'm happy about it and I'm optimistic about it, but I fear it's just going to be a roof. So trim, stay in defense, book profits more often than usual, just because we don't know what the headline is going to be. And there we get the smackdown into yesterday. So now I look below. So what's the opportunity below? So if I wanted to try to short or grab some puts and profit from them on the way down, or protect myself, if we lose the 2,720 to 15 area, it's kind of like a rubber band. The 26s are going to come, and the downside, I look left and see what happened last time, and I think it was the 2640 50 zone should also act as support if that happens. So I look for the necklines, and I look for the opportunity beyond the neckline.
All right. I know you were doing some sniper fire in Apple after the report. You were selling those puts and buying them back pretty quickly here. Bad news yesterday in Apple. We are now filling the gap from its last earnings reports here. Apple on its heels. What is Mr. Nick Chahine looking at?
I remember, I'm not sure if I said it on your show or not, but I must have, because you guys asked me about it. I was asked on the way up when it had the mega breakout 2 earnings ago, am I chasing Apple with credit put spread? I said, no, a better entry point was around 196. So there it is, 196 are people, but that's why I started selling the puts, but I left room. So worst case scenario, I may own it at 180. And I think I wouldn't get damaged too much if I do. So that's the point of selling the put. Where are you willing to own the shares? So 196 was a better entry point, and I didn't pick it out of the blue. If you look at the chart, that's the neckline from which it broke out. So if it was resistance, now it should be in theory support. However, there is a downside scenario to 187-ish that I could see happening on the breakdown from yesterday. One could argue that it's an inverse cup and handle, which may point to 175 probably if the technicians draw it perfectly. But I usually look left and see where the battle was, and the volume profile tells me that there should be a strong battle around 185 to 88.
What about the fundamentals, Nick? I mean, you get LITE, coming out yesterday, and I believe that the components they make are for the higher end iPhones here. The ecosystem is slowing down. I know you've never been a huge fan. Oh, let me finish. I know you've never been a huge fan of Tim Cook here. What about the fundamentals of the company?
So are we seriously now? Remind me, when was the extrapolation from one supplier to Apple a story that told bad news about the company results? I can't think of one. So far, 100, wasn't it Taiwan Semi that was supposed to kill Apple last time it said something bad? Was it Taiwan? One of those companies came out and said.
We've seen this before. I agree. We have seen this.
Not just once, twice, or 3 times. We've seen it maybe a dozen times before. One supply. So do we know that Cook didn't switch to another supplier for whatever reason? We don't know what's going on. And the fact that Apple said we're not going to report units, I think the market was upset because now they can't trade it as often and as wildly around the event, because they can't say we're looking for that one number, because now it has to be, we're looking at the overall sales. And if they're not going to break it to the point of which unit came from what, which dollar came from what unit, then we're forced to look at the overall picture, including services and whatever else they have. So I think the fundamentals in Apple are not any worse than they were 3 months ago. And that's my opinion. And if they are, then we shouldn't buy anything, because if Apple's in trouble, the whole market's in trouble. People go on CNBC or write articles and they say, oh, FANG are dead. Let me try my luck at something else. And they name other stocks. And it's like, are you seriously saying that if FANG is going to go down to wherever you're saying it's going to go down, the other stuff is going to hold up? There is no way. If they are calling doom for all the techs, I think the market's in trouble. And it could be. So defense is in order for the fundamental trades.
Have you been following this natural gas rally at all? Going the opposite way of the crude oil futures, which have been down. I'll go to that one next here. Down 12 days in a row here. I mean, when it had that gap up day, what was that, 6-7 days ago? I mean, in commodities, when commodities get going one way or another, it's really hard to stop it here. Have you been looking at either the natural gas futures or UNG or any of those trading vehicles for natural gas?
I don't trade natural gas. I have friends that trade the futures in it, and I'm looking at the charts. Did you say they're down? Because
No. Crude is down. Crude is down.
Oh, crude's down. Yeah. Well, I did try to profit from crude on the wedge. So I don't do natural gas. So if you ask me to look at the charts, I'm looking at
about
it.
Crude?
And it's just...
Tell us about crude. Down 12 days in a row. When's it going to end?
How many times on your show I said crude should be in the mid 50s on a fundamental basis? I'm not an expert at crude, but the way the price unfolded, it was rhetoric that brought it up, and everybody's saying 80 and 100 again, and pretty much that was the top. So I went long crude recently via the USO, nothing serious, just because of the wedge, that the sharp descending wedge. A few weeks ago, Saudi Arabia came out and said, they literally said, we are pumping as much as we can. And it was to play nicey with the West and Trump. And then they made the faux pas of killing the poor guy. And then so they had to double their efforts in being nicey. And now they said, guess what? We have a cut coming. And I was hoping that would be the trigger. And then just hours later, Trump came out, tweeted whatever he tweeted, and it foiled the trade for me. So I'm holding it for another day or two. There's just a few calls, not to break the piggy bank. But the reason I went long is a technical reason, because if I look left, that was the breakout neck from months ago, say December, and also was the bottom in February. So I thought that would be a good snipe entry point. But if it doesn't work out, I'll bail. But fundamentally, I don't think crude should be at 70. I think it should be in the mid 50s. But I'm not an expert in crude itself.
I mean, look at some of these drillers though, and you think like they're pricing like you're right, Nick, like it's going a lot lower. Halliburton, Schlumberger, but look at rig. A lot of these things, and even looking and putting in perspective, like look at Halliburton and Schlumberger. I mean, and we've talked about this on the show before too. These Schlumberger, let's go to SLB. Slob, everybody calls on the street. 2012, 2013, oil, is well over $100 a barrel, and Slob was trading at 60. And now you look at oil here. Well, and actually, that's not even a good. Let's just go look to 2017. I'm getting myself confused here, but look at 2017 when oil was trading at $23 a barrel. SLB was trading like 80. Now oil's up at 60 and SLB's at 50. Like something's going on here. It continues to go down. And even though oil rallied here in the last year overall, I know we've been down for 12 straight days, but when you really put it in perspective, it was, for the last year or so, oil's been going up. And you've got SLB, Halliburton, that are not going up at all. The majors went up, Chevron went up, Exxon went up, but some of these other smaller ones have not.
I did a trade on XOP and it worked for a few days. And I posted a chart for XOP and I had a white box. I said, it's close to my target, I would get out. So since then, it just puked itself way down. So SLB, I think they still run red, meaning the P&L is not positive. So it wouldn't be a stock I would try to catch.
How do you come up with that white box, Nick? Just how do you go into the left here on the chart? Is it because of the gap that you had down? What is this?
Okay, so I told you, I look for I believe in technical analysis, but I'm not as accurate as the technicians would do it. So that was, first of all, there was a gap. So I figured they're going to try to fill the gap. And then I look left and I see the battle that went beforehand. So there were fierce battles at that level in January, in April, and in August. So I figured it was going to be fierce again. So anywhere near that, it would be an exit point for somebody that caught the swing high. So if I was a genius and I caught the bottom, this is where I trim or exit. And then if I was looking to capture the rest of the rally, meaning covering the gap and then prior highs, I would load after clearing it on a clear close. So that didn't happen, so I didn't reload.
Okay. Apple's now down another $2.50 here, Nick. I just want to get your thoughts here. I know we talked it briefly, but now you're coming to a level where you do have price as memory. You get that 188, 189 level. It's where we kind of broke out from originally back in July. Now you're coming all the way down to that level. Are you looking to rate some puts here?
I would, because here's the deal with Apple. I mean, those are the numbers I just regurgitated to you earlier.
Yeah,
I do see the downside risk to 185, even 175. If you draw an inverse cup and handle properly at a neckline somewhere around 198, 197, the downside should be the distance between that number and the high, which is 232. So 197 minus 232, that's the downside risk on a proper inverse cup and handle neckline draw. But in the way of that stands a big battle around 188, let's call it, plus or minus $3. And, there is an open gap all the way to that 170s goal of that inverse cup and handle. So it's not going to go whoosh down to there, but it might get there. So I have to be ready to own it through that. But what happens to the rest of the market if Apple is doing this? That's what boggles my mind when the experts come out and they say, well, FANG is dead. It's destined to go to zero. Pretty much the news is. And then they say, okay, my pick this week is the XRT or something like that. That just boggles my mind. If indeed this is going to happen to the biggest companies on the planet, everything is going to go down.
I mean, we saw it yesterday. This was Apple, it was LITE, but it was really Apple that drove the whole market down, with Apple to trade down 11. Obviously, the catalyst was the LITE report, but that was Apple all the way driving us down significantly yesterday, because we were flat. We were flat when that LITE news came out, and we got murdered.
So we mentioned something last week on your show that we need to mention here, talking about Apple. 13 Fs. Are they going to be supportive of an Apple story? Are we going to see a whole bunch of whales saying, hey, Apple spiked to 220 something, we had to close or trim our position and roll into X? So I don't think they usually say, I added to my position in Apple or something like that. Now, I want to remind you on the Tesla thing that there is the possibility of a really bad news in Tesla from the 13F. So
why?
Because that covers the period of time where Elon was on crack. So,
yeah, good point.
And
I remember
he wasn't on crack. He was smoking crack. Okay, there's a big difference.
Okay, all
right, Nick. All right.
Okay, I'll walk it down. So it was the period of time where he was acting inappropriately on Twitter.
Much better.
Okay. So and I remember a lot of experts that loved the stock hated that period. So was there capitulation other than their words? Because their words were capitulative. So is that a word? They were like, I hate it. Whether they put their mouth where their hate was, I'm not sure. But if that's the case, the 13F period might not be very happy for Tesla. So I trimmed my longs. I'm still long via 195 puts sold, but those are house money. But I definitely trimmed my long. I will go long again if it dips again. But in Tesla, well, since we just shifted to Tesla, hopefully you haven't covered it already.
I don't like the way this chart looks here. You had that nice rally. I don't know. They extended the trading range. You thought that 315 area I talked a lot about. Extended to 350 here. I just don't like these kind of pockets in a market. I could see this, going back down to the three. It's been in a trading range. Maybe we'll go back down to 300 or whatever. If you want more information on Tesla, Apple, and Amazon, I'm going to ask you about Amazon next. On Thursday morning, Spencer's still going to be gone. We're going to have one of the top analysts on Wall Street, Gene Munster from Loop Ventures. We're going to get him for 30 minutes, Nick. So if you want to tune in with some tough questions and other people, we will be talking to Mr. Munster. That'll be on Thursday. Rick Wise wants to know about Amazon. We'll let you talk Amazon, then we'll let you go and get ready for the open.
Okay. I just posted a chart on Tesla, so that shows you the downside risk. They may retest the 300 level. So Amazon, long-term, it's a monster. It's a beast. I wouldn't short it. Short-term, it's still caught up in the swirl of FANG. I wish they had never invented that acronym, because now they trade them as a unit, unfortunately. So they beat down the Googles, which doesn't belong in there. But anyway, so long-term, I still believe in it. I still think they're going to eat everybody's lunch. In what industry, who knows? Short term, there is a downside scenario, a mega downside scenario. So let's say the markets collapse here. There should be a point of control support somewhere around 1580 eyeball. But if that fails, then we're talking 1480-ish, 1475. If that fails, okay, danger. So once they lost the 1660 area, the 1450 was in the cards. I drew it. I put a green line to it. They came close. So if they lose that recent low, then we're talking another head and shoulder-ish pattern, loosely interpreted, that could bring in the 12s. I'm not calling for it, but that is the technical risk if the markets collapse.
All right. We've been on the line with Nick Chahine. He's the author of Create Income with Option Spreads. He joins the show every Tuesday to give us his technical and fundamental outlooks on the market. Nick, a pleasure as always. We'll talk to you again. So, Nick, I want to ask you, you doing okay out there with the fires and everything?
Luckily, this time it's not around our place. The last one we had where we got evacuated was months ago, and that went off without a hitch. So hopefully the other people here, I have a few friends up there that are stuck in the smoke and all of that, but it is bad.
Okay. All right. We'll let you go here, Nick. Thank you as always. Dennis, what stock that, let me bring up my pro here. And this,
I want to talk Boeing.
Okay. Let's talk Boeing.
You know why? Because it's not flying here this morning. It's down $5 more. So it got killed yesterday, was down 13, down 5 more. We had orders coming out just after 8 o'clock. Boeing 737 net orders are delivered 57 planes in October. That was versus 87 in September. Net orders 43 versus 61 in September. So it looks like less planes being sold. And that is the catalyst here for your BA downturn this morning.
And they've had, I know there was some problems with some planes and stuff. And I know that's bearing heavily on the issue. We are trading down in the pre-market. Let's see if I can give you a pre-market low here. Just at 356. Let's look at the dailies here, see if we can find some support for Boeing here. Come on, get my daily chart to come up here. And a lot of air in here. A lot of air. You got a gap to fill down to 350. We're almost there yet. And then you got to figure out what to do in this candle here. I don't even know. Maybe drill down to a 15-minute chart, try and find something. But 350 will be a gap fill. Tilray has earnings today, Dennis, and I know you are going to be playing that one.
I might be playing some sympathy plays off, but I probably won't play the leader because it'll be a little bit too wild for me. But I probably will play some sympathy off. I think a lot of the pot stocks report this week.
Do they? I
think so. I think there's quite a few on the calendar there. I just took a quick look, but anyways, I don't have it in front of me right now, but I think quite a few of them report. TLRY, I don't know. We're kind of muted activity heading into it. I mean, it's hard to say, a 10-point range from yesterday's muted activity, but the way it's traded, that does seem like a smaller candle for TLRY. Trading up slightly here in the pre-market. This is just going to be a coin flip for me. I mean, and we just had Nick on. He always calls it a binary event, which is a great word for the earnings reports. Because you can't, nobody can know unless you're an insider. You're not going to know what the earnings are going to be, and obviously it's the interpretation of those earnings. And in this case, it doesn't even. It's kind of in the middle of nowhere, so I can't even get a feel for how they're going to interpret it. So I think I'm sitting out. I think I'm sitting out the TLRY report.
All right, let's take a look at Veritone here. And I remember covering this stock last year, and I remember it had...
Oh, the Baron, VERI he's talking.
Yeah,
most people will not know this. Small stock.
Look at that. It went all the way up to 70. They might even got into the 80 handle. And then it got citroned, and it came all the way back down here. And I know there was a gap down because I remember trying to put my order in. I don't know. I probably canceled it, but I put the order in at like the high of the day. It was on a Friday. Barron's came out, and I know it never came near it and then took off. But we got a good report coming up. Well, no, they missed. The EPS came in at 86 cents versus estimates of a loss of 78 cents. Both losses there. but they beat on the sales. 6.02 million was the estimate. They came in at 7.545 billion here. Dennis, what was that stock was there a tracking stock or something you were trying to trade with this? Or was that a different issue?
No, it was ACTG. And yeah. ACTG owned a ton of Veritone. ACTG owns a ton of it. So I did have that. I still have a little bit of that investment portfolio there. I sold a bunch of it. Actually, I got out of this right near the top. And sometimes you got to use those Russell days. Back in June, this thing had a huge buy-in balance on the close. It was, it was either an addition or something. I can't remember the details, but something was going on with the Russell and the rebalance. I think got up to 440. And on ACTG, and I actually sold most of mine into that, and that was the top. So sometimes, the best days to buy or sell, some of these rebalancing days that they do, because you get some extraordinary moves, and sometimes those moves are just done for obviously non-fundamental reasons. They're done for indexing reasons, and those sometimes moves don't last. And I wish I would have sold it all that day, but I did not. But yeah, you're right. I had ACTG, good memory, Joel. Acacia Research, that owns a ton of it. They own a lot of other stuff too. So I was just saying, I thought that was a safer way to play it. I'm glad I played it that way, because when Veritone was up like $30, $40, $50, it was $70. It's got up to $74. $6 closed at $6.88. It's getting the lift. It got the upgrade. It had some earnings here, but I don't know. I mean, this isn't one of those AI plays, but such a small company, I'm not sure this one's gonna be one of the survivors here or not.
All right.
Speculative capital only.
Speculative capital only. You did get a high right at 850 here. Looking on the daily charts, I see an 825 high. We are currently below that, 825. That was your November 2nd high. And then, another high at 823, and then a couple highs flanking 850. So you have your resistance points there. Not sure what the short interest is in the issue. Dennis, recapping the S&Ps here. We've had a slow leak, still up 11.25 handles at 27.39, a tidy 30-point range here during our show. 27.35 is mid-range here. I think I hope to get a little pop up here and maybe test that pre-market high. Got to take out that pre-market high for get me any kind of believer in the long side. Coming back on the downside target, yesterday's close 27.75 was your close. Monday's low 22.25. So still your pre-market low at 27.19. Dennis, any final thoughts here this morning?
We've obviously leaked quite a bit of the gains since we started the show. I still think we're going to leak it all. I think eventually we're going red. Just my thoughts here. So I'm a seller of the rips.
Okay. And tomorrow, I don't have a guest lined up yet for tomorrow, Dennis. If you got any suggestions, I'd like to take that. But we'll be back tomorrow covering all the trading action here in Apple, Goldman Sachs. Maybe see if you can get PCG to recover. Till rate earnings are on the deck. We'll be covering that as well. I will check the production quality here, take a listen, and see if I can get it back to par. But thanks, folks. Thanks for tuning in today to Benzinga's Pre-Market Prep, sponsored by Benzinga Pro, and we'll be back with you tomorrow morning.
Good job, Joel. I'm out.
What's up?